Hello again, Mavericks. This is Ankit here, and let's begin our market coverage. This is May the 3rd. It's a Tuesday. Hope everyone's doing well, and let's get down to today's market price action. Talk about what's moving in the currency market and the cryptocurrency market, and then take a look at in the next 24 hours as we get closer to the most important event for the day or for the week, the FOMC Rate Statement. So let's get down to a quick market analysis and see how markets perform today. So let's start with the equity markets, and we can see that markets are still holding off from that support that we bounced off of yesterday. And so far, it was actually a bit of a volatile day today, but this is where markets being volatile a little bit. And then also we're seeing a little bit more of a pause as we go into the FOMC tomorrow. And I think after that, we'll probably likely to see a bigger move one way or the other. So overall, the markets still remain on thin ice here. Same thing happening in the world markets as well. The world stock index doing the exact same thing. So we are seeing the global markets are pretty much in sync here, moving along. Now, crypto world, you can see that we are slowly getting closer towards the support. And at this point, if we break the support, I think that's where the next big move is likely to be. But so far, the cryptocurrency has been in a sideways range for the last few months. So I think this is where, when we see a break, this is likely to come with a better movement. So overall, as we take a look at the headlines and we take a look at other areas, like gold was up 0.24%, so not a big day there. And oil was up 1.37%. So one of the things we did notice is that the strong dollar has been weighing down on a lot of the commodities, a lot of the other areas where it's dollar sensitive. We are noticing a lot more weakness is emerging there. So as far as the news goes, so we have seen RBA hike rates last night by 25 basis points. And they actually did more than expected. I think they were expecting a 15 basis points hike, and then they actually came with 25. So we did notice the Aussie did well after that. And again, this is a good kind of indication just to look at where we are looking for rate hikes across the world. So all major central banks are following the same path. So it seems like they continue to follow the same path in the future. So we are in this interest rate hike environment. So as far as the market outlook goes, again, we are still in this -2 to -3 outlook. But I must say, the based on where we are right now, I wouldn't mind taking a look at this and say, well, this is a support that we are noticing right now. And if we do break the support, I think that's where it'll be a better point to be a bit more aggressive. But as long as the support kind of holds in place, I think this is where you need to be a little bit more patient. Although all indicators are telling you to be short, I think what we need to take a look at in this market is support and resistance levels. So as you can see in the past few weeks, this moving averages hasn't been really as helpful because we have seen a wide range and a lot of sideways price action. So we'll expect that continue to follow until we see a break. Now, looking at the schedule, we actually have quite a busy schedule this week. And again, overnight or this evening, we have the Kiwi employment report. So far, again, we haven't seen any bad employment reports across the world. Things are looking pretty good. And again, this is where the difference is, that the economic numbers are still decent. So the numbers are not really showing as much of that weakness, but we are seeing a lot of jitters in the markets. But that's just because of the rising inflation and then raising rates, which again is likely to keep a lid on prices soaring. So the Kiwi is the one that we'll probably take a look at. But I think most importantly, tomorrow is what we are focusing on. And it's just not the statement. I think right now 50 basis point hike is what they're expecting. And that's what's really priced into the markets. And remember, the big moves happen when we see something out of the ordinary, something that's not being priced in, something not being an expectation. So that could come either from this rate hike. Again, if they come up with 25 basis points instead of 50, again, we could see a big market movement there. If it comes in line with expectation, then most likely we see movement in this press conference, because this is where we get the forward guidance. Are they looking to raise rates in the next meeting as well? Or are they looking for wait and see approach? That will have a big impact on the market. So tomorrow is an important day, and that would affect the dollar mostly. And we have to see how the dollar moves. Based on that, we'd like to see a lot more movements across the world. On Thursday and Friday, again, more data coming out, but I think all eyes is really on tomorrow. So I think the second half this week looks pretty good as far as the trading opportunity goes. So let's dive into the cryptocurrency world and the foreign currency world and look at the performance and see how things have moved percentage-wise. As you can see, it was a bit of a bloodbath in the crypto world. And again, this is where every time market seems jittery, the cryptocurrency world is not really acting as a safe haven. So that's where the money comes out of. And so far, we continue to see that price action. Now, going into the currency world, and currency world is actually not doing much. And again, this is kind of an expected movement because a lot of times when there's a big event on the docket, we probably see markets in a holding pattern till we get that news. So that's where everything was. Considering how active the currency world has been in the past few weeks so far, this was a really quiet day. Again, yen down 0.12%, so nothing really moved more than 0.5%. The only thing that stood out was the Aussie, and that's again pointing out to the rate hike that took place with the RBA. So that's where really the gains were. But outside of that, it's pretty quiet day. So I think the next 24 hours likely to bring more fireworks. And this is where we have to keep an eye on the velocity score. Again, as you keep an eye on the velocity scores today, you notice that you didn't really get too many trading opportunities outside of the Aussie, which really took place after the rate hike, and that was overnight. During the day today was not really a big moving day. So a lot of things stayed in the zero level, which means that it's undecided which way it wants to go. And that's where you have to keep the powder dry and then wait for the direction, wait for the velocity scores to pick up, and then see if this is the right trade to make. So let's jump in and take a look at some possible trades here and see which trades looks decent at this point. But we'll be actually covering a lot tomorrow during the midweek update, which again, in the same class, we'll be covering the FOMC rate decision and looking for trading opportunities with it. But let's actually talk about dollar. That's where a lot of the questions have been, and that's where you have to really pay attention to, because dollar has broken out ahead of this event. So the question really is that, is the market already pricing in? Is it more like a buy the rumor and the sell the news, or what the market sentiment is? So you can see that the sentiment is still pretty strong. We're still holding these levels. Look at the 4-hour chart. We're still consolidating. So we can't really rule out the fact that this is looking really strong. So I'm not really seeing the early jitters where it might want to sell on the news, but something we always want to pay attention to. So I think the 4-hour chart is really what we're looking for. If there's a change in momentum, we'll probably see a lower high with a lower low. But as you can see right now, we haven't established a lower low. As long as it's making a lower high, or is a higher with the higher high, I think that's where we continue to see that pattern continue to go forward. So let's take a look at other areas and take a look at where else we can find opportunities. And you can see the yen is really not doing much. So far, the yen has been actually gone a bit more sideways in the short term. The only area where I can see a little bit of opportunity take place is the Swiss franc. But you can see that Swiss franc, if you look at the trend score is not really strong here. Trend score is mostly 0 to a bit of a -1. But so far, not really getting a good indication there. But if this is something, if it's going to move, we need to pay attention to the lows over here. And a break of that will make this currency a lot more interesting to trade. But outside of that, euro looks steady, pound looks steady. So a lot of the steady places. The area that actually looks good, seems like it wants to run higher, is the Canadian dollar. So that's something we have been watching, something we'll need to pay attention to. After the rate hike yesterday, you can see that the Aussie is still in the sideways range. So I would be still cautious on the Aussie here until and unless it start to break higher. This thing it's not really giving us a great sign that it wants to rally here. So we have to always look for what the price action is. We already know they've hiked the rates. So now it's more like forward guidance, see which way the market goes. And then here we are with the Kiwi, and Kiwi has been mostly deteriorating, and you can see that the price action has now almost given more than 50% of those gains that we saw from February. So the employment rate, the statement today will probably give us a little bit more catalyst. But at this point, if we take a look at any chart time frame, so far we're making a bit of a lower high with a lower low, a lower high with a lower low. So for a trend to change, we need a higher high with a higher low, a higher high and a higher low, and that's where we know the price will likely to reverse. So far, not really seeing that, and this is where it's important to take a look at some of these patterns, some of the chart patterns here, like the Aussie Kiwi. And I was actually watching this important level of 110 on this Aussie Kiwi, and you can see that we haven't really. I mean, if you go back and further in the time frame, let's turn this parabolic SAR off. So you can see that this has been actually acting as a very nice level of resistance. So last time we broke out of that resistance was back in 2018, a little bit in 2017, but in the last couple of years or a few years, you can see the real line of sand was about 108. So at this point, I think it looks pretty interesting to me. If it does fail, as you can see, we are not really that far from the breakout point. So if we do fail over here, I think we could see a bit of a change in that momentum. But keep an eye on Aussie Kiwi as an indicator on which currencies to pick. Outside of those two, another one that really we need to pay attention to is the dollar CAD. As you can see, that dollar CAD is testing the resistance that hasn't been broken for, I mean, all last year. I mean, we hit that level. We haven't really broken that level on dollar CAD, which is about 129 is really where the level of resistance is. We broke higher on December 21st. That was 29.52. Again, very important level of resistance. Right now, we're stalling right there at that point. So this is going to be something I'll have on the top of my list, especially on a dollar reversal. I would really like to watch this and see if it wants to pull back as far as these big levels goes. If it does break that 129.50 to 130, again, that will be a huge break, because if you go on a weekly chart, you can see how important level of that resistance is. So something to keep an eye on tomorrow. And I know outside of that, a lot of traders have been kind of holding and seeing what happened with dollar yen. And as you can see, dollar yen hasn't really showed any sign of slowing down here. We did pause a little bit here, rally. We're just pausing here a little bit. Until and unless we get this trend-changing move, which is making a bit of a lower low with a lower high, that's when we know a trend is changing. But so far, don't go against the trend. Stay with the trend. So a lot of things to take a look at in the next 24 hours. And like I said, we'll probably want to pay a close attention to the US dollar, and then see how everything else kind of moves around. So that's the game plan for tomorrow. Again, in conclusion, I think there will be a bigger move after the FOMC rate statement. We'll be looking at all the key employment report tonight, and most importantly, the FOMC rate statement, which is due tomorrow, but we'll be meeting live. We'll go through it. Till then, take care. And